Hey guys, Charlie here. This week in the crypto world has been insane, with Bitcoin hitting a jaw-dropping 73,000 US dollars, smashing past all-time highs. Think making profits is fun? Wait till you hear about keeping them after taxes. But don't worry, we've got Matthew from Crypto Tax Made Easy here to lighten the mood and guide us through the tax jungle this week. So grab your seat and settle in, let's get started.
Hey, welcome to Web3 Weekly with your host, Blockstars Technology.
Let's go.
Hi everyone. So welcome to episode 67. We're going to talk about crypto tax. And who better else can have it today? We have Matt from Crypto Tax Made Easy. So Matt, I'm going to pass the mic to you. So if you can give a bit of an intro about who you are and how it all come about, that would be fantastic for our community.
Awesome. Thanks, Cozy. Yeah, I think like a lot of people, I got into the crypto tax space because I was a bit of a crypto degen. And when I first got into crypto in like 2016, 17, it was pretty easy from a tax perspective. All I was really doing is buying Bitcoin, ETH, and I bought a few ICOs and bag held them all the way down to zero, never even sold them. There was like no taxable events really. So it was pretty easy to deal with for years. And then all of a sudden, 2020, 2021, that's when it was like NFTs and DeFi and Binance Smart Chain with all this yield farming stuff coming up. All of a sudden, my transaction count went from a few purchases of Bitcoin or Ethereum on Coinbase and the odd weird little ICO to now I've got thousands of transactions in the 2020-21 tax year. And the spreadsheet that I had just wasn't cutting it anymore. And to be honest, at that point, I was like, how are these things even supposed to be taxed? And when I looked into the guidance, because for me, I'm a US citizen, so I have the great pleasure of being taxed on my worldwide income, no matter where I live forever. And I also live here in Australia. So I had to figure out, okay, has the IRS put out any guidance for the US? Has the ATO put out any guidance for Australia? Are there any like legal rulings that might give me some precedent to figure out how to deal with this stuff? And there wasn't much. And there weren't many tools. It was an absolute nightmare back then to figure out like what's going on with these urine finance contract interactions, what's going on with these like pancake swap liquidity pairs. It was just absolute mayhem with my tax situation. So because I had just immigrated to Australia, I wanted to make sure that like my first year paying taxes that involved crypto, that I did it by the books. Like I didn't want them to have any reason to kick me out of the country. So I was like, how do I get this done right? And and so what I ended up doing is I looked around and, it looked like there might have been some accountants who were just starting to figure it out. But when it came to some of the more edgy stuff I was doing, like Binance Smart Chain, they're like, oh, we're not, we haven't really had any clients for that yet. So at that point, they were like, probably not something we can help with at the moment. And then I started looking at the crypto tax softwares and I was like, oh, like, cool. I just put in my wallets and it'll tell me how much I owe. And I tested out 6 that were out there at the time. Yeah. And it was like, some said I owed $1 million. Some said I lost 100,000. Some said I like didn't make any money. It was all over the shop. And I was like, man, I put myself into a bit of a pickle here. And at that point I was like, all right, I'm just going to pick one of these softwares. I picked the one that had the best Binance integration at the time. I picked the one that just had a user interface I liked and that also had really good support. And that ended up being Coinly. And I was like, I'm just going to become an expert in this. I'm going to go through the headache of the learning curve and I'm just going to figure out how to get it done right. And I did. It took me weeks to figure out how to go through the thousands of transactions that I had, figure out how to properly categorize them. And to be honest, I've had to go back and correct mistakes since, now that I've learned more. But I got to a relatively accurate place where I was like, okay, if I submit this to the ATO, I think that they're going to just go, you know what? Good job. Pat me on the head. Good job trying to get through all that. We're not gonna look with too much scrutiny. And funny enough, I had quite a few friends who like heard my story and were like, hey man, would you be willing to just do mine for me? Like if I set up Coinly, could you do mine? I was like, sounds boring, but sure, I'll give it a go. If you pay me in crypto, I'll be happy to. And
Good one.
yeah. And so then it just started organically growing where more and more people were hearing about it, and there weren't a lot of services doing it. So over time, I started hiring chartered accountants and accountants in the US, and I ended up getting to the point where now I was teaching accountants and CPAs and chartered accountants how to do crypto taxes. I was actually invited to be on an expert witness team in the US for a court case there that involved a need for some crypto forensics, which I know you guys are familiar with. And it's been a really cool ride ever since then. I never thought that trying to figure out how to do my crypto taxes would lead to so many cool opportunities. But it absolutely has. And now we have over 300 clients across the world. And we just focus on helping people fix the errors in their crypto tax software to make sure that the reports that it spits out are reasonably accurate, that they're not overpaying on their taxes. And then they can use that to either self-file, or if they have a tax preparer or a tax agent that they file through, then those reports, they can just hand it to them and then have it integrated in their return. So, we don't really do the tax preparation and the tax filing. We don't really do the tax strategy for our clients, but we have some great partners in our network who do that. We just focus on that like really annoying, boring, headachy data reconciliation and categorization process.
Oh, that's cool, man. I think when I met you, that was like last year, wasn't it? First time we met at it's in Brisbane, wasn't it?
Yeah, it was one of the Brisbane Web3 events.
Yeah, Web3 events, and that's really cool. And when you said hi, I'm like, oh, that's a different accent, and I'm like, I wonder which part of US are you from? And so, what made you come to Australia?
Well, originally, funny enough, it was a Ninja Warrior competition, like Australia Ninja Warrior. There was one happening in Perth. And I happened to be in Bali traveling at the time. And one of my friends called up and was like, hey, do you want to jump in as a wild card on this competition? So I did. And then I realized I have a 90-day visa. That's a good chunk of time to go see Australia. And as I traveled around, I met a lot of friends who had visited me in the US that are Australian. And one of them introduced me to my now wife. So once I met her, it was
the rest is history.
The rest is history. Ended up moving over here.
I thought you were gonna say like it's surfing, because I mean, like, you're an avid surfer, right?
Yeah.
So, and like we just before we started, we were just talking about like, in the Web3 space, we had this, go and touch grass, and in your case, a little bit different. And so, is it something, a passion that you had always had, like, sort of the surfing side of things, or is it something that you pick up like, because I tried surfing and I think I can barely get on my fours, and after that's it, there's no more balance in there. So
yeah, surfing is something where for decades, I was a long-term like beginner, almost intermediate. Okay. I never did it enough to get through the learning curve, but I always just loved it. I was always drawn to the ocean and grew up near the ocean as a kid, but other things took my interest, sports, music, all that. Yeah. And then when I moved to Australia, we live 2 blocks from the beach, and there was no excuse for me. I really, have over the last like 5-6 years formed a deep relationship with surfing. And as I was telling you, I think before the stream, over the past 2 years, I think I've surfed, 630 days or 640 days between the last 2 years.
I think that's the thing, is like the lifestyle, isn't it? I think that's what the Australia is like. We still want to get the crypto regulation fixed up, but when it comes to weather and the, and the locations and the beaches, you can't beat it. So
no, you can't.
Yeah, awesome. All right, I guess let's jump into, like a little bit more juicy stuff, mate. Hey.
Yeah.
So so one of the questions that I have here is like, so I think you're because you're catering to a global clientele. We are here in Australia. We are mainly, I would say, majority of our clients who we work with is like, Australasia based. But we only got a handful of clients who we deal with in the US and Europe. And given the regulation, all the cross-border regulation
Mm.
and the privacy laws, everything's going on, how do you keep up with what's happening with your US, Europe, Australasia? Like, how does it work, man? Do you ever sleep apart from surfing?
Yeah, recently I haven't been. I've actually been working with the United States tax deadline coming up. And
Yes.
then right after that's Canada. And then right after that is the May 31st Australian extension deadline. It's been nonstop. I'm working 7-day weeks, kind of minimum 8 hours a day at the moment. It's pretty crazy. But it's cool because usually, like, I had already known US tax regulations and Australian just because for myself, I had to learn these things. Those are the two countries that I have to pay tax in every year. And then I started getting requests from clients in other countries. And I would tell them, hey, I've never had to do any crypto tax reports in your country. And they're like, well, nobody in my country has either. It looks like you've done them before. Like, if you take some time to learn the rules, I'm sure you can figure it out.
Yeah.
And
Yeah.
so I've actually taken the time to learn the tax rules in like tons of different countries now. And it's very interesting to see like which ones have some very like crypto user friendly tax regulations, and then which ones have probably pretty aggressive ones that seem to really discourage any participation by individual taxpayers in crypto. And it's cool to see. I almost wish I could create a mashup of some of the best crypto tax rules that I've seen around the world, but I know that would be a bit too utopian to maybe have in here. Yeah.
Oh well, I mean, like, look, it's the I think the what I see from where I stand is like, or where I'm sitting, is that the challenges, that constant, the new ways of how people are, like the technical people just come up with whole different like ways of incentivizing their users. Like, who knew, like the token drops or the yield farming, and also saw that, like, I think with the 404, the contracts, how that works, I think that's going to open up another whole can of worms. And so when it comes to this technology, when it's not like straightforward crypto, when there's NFTs and things like that involved, what is the take? How do you go about doing that? What is your how do you process that kind of transactions?
Yeah, there's an incredible amount of gray area at the moment because there's not a lot of binding rules that like give us clear ideas about what does the law say we have to do. There's a lot of guidance which has been released by the tax offices, but
Yeah.
that necessarily binding rules. So because there's a little bit of gray area, I'm not advising my clients on like, hey, this is how you should be treating these things.
Yeah.
But generally, I default to, okay, what has the tax office, what does the ATO say, or what does the IRS say? That's going to be the default treatment. And I'll tell a client, like, hey, if you want to talk to a tax lawyer or if you want to talk to a CPA, like, getting a different opinion, and potentially from a tax lawyer getting an opinion letter justifies or substantiates a position that might save you a ton on taxes, could be worth it for you because it is expensive. Tax lawyers, they earn their keep, but it's expensive to actually employ one. So generally, if I see that somebody, it's like, oh man, maybe if this like thing that the ATO says is a CGT event, maybe if you can get a tax lawyer to argue this for you with an opinion letter, perhaps actually save you a ton of money if you were to get that opinion letter, and you can kind of worry a little bit less, because as soon as the tax lawyer is on your side, usually the tax office isn't going to throw resources at fighting you. They're going to go try to pick on the guy that doesn't have the lion in their corner.
Yes. I mean, like, look, even like, since I think last night, I think everyone is like super hyped up what's happening. I've been like, my ex, feed is like full of like orange icons and memes and everything else going on. And so now with this, the bear, in the end of the bear market and the beginning of the bull market, we're already in the bull market now. I think in that space, have you seen a big uptick on new clients approaching you or asking questions who are not even thinking that, okay, whether this is taxable, right? People are like, oh, the crypto is something that you can own, and it's not a people don't realize it's taxable thing. They think, oh, I can just buy something like buying a digital book or something, right? So what are the sort of the if I ask you like what type of questions that you would think like, oh, you know what, this is like so basic, but that you understand, okay, these are guys coming in to the ecosystem like brand new,
Yeah.
right? Every time you're seeing that, every time it's a bull market, it's a new batch of people comes in and they get burned.
Yeah.
You have a bit of a drop off, and they I think it's like working out your muscles. So what type of questions do you get asked most of the time?
Yeah, it's depends. Most people just want to know how much does it cost. That's probably the most common
That's a
question.
big one, right?
Yeah, that's a big one. But recently, because of the kind of airdrop meta that's been going on, a lot of people are curious about how airdrops are going to be taxed. They're curious about how to determine the fair market value when they receive the airdrops. And they're also curious about whether or not there's any strategy that they should have in terms of, should I sell it right away and buy it back? Should I, what's the best way to approach airdrops so that I'm not going to have some crazy tax burden? The ATO, luckily, like here in Australia, the ATO was like, well, if an airdrop is kind of like the TGE, if this is the genesis event for a token, it's actually a $0 cost acquisition. So essentially you get all the tokens, and if you hold them for 12 months, then you also get the long-term capital gains tax discount. So when you sell it, let's say you receive an airdrop and then a year later it's worth $1,000 and you sell it, you got it for $0. You sold it for $1,000, so there's $1,000 capital gain. But essentially, if you've waited 12 months, you get a 50% discount on your tax. But the thing that I always think is the market doesn't care about your taxes. The market's going to move the way it wants to move. So, a lot of people with airdrops, it's most likely, that you're going to probably sell it or a portion of it shortly after you've received it. And in that case, it's going to be a short-term capital gain. So it means that you've received it for $0 and then you've sold it for, let's say, again, $1,000. And then your short-term capital gains tax rate is going to get applied to the sale there. So, that's how it works in Australia at the moment. I really like that rule around if it's like the genesis of the token, if there's no prior trading history on the token, then you can essentially defer that tax out into the future instead of it being income tax. Because let's say you get airdropped a token that's already got a trading history. It's not the first time it's been released. Like let's say Jupiter on Solana. They did a huge airdrop. That was the genesis event. They said that there's going to be a season 2 airdrop, maybe in a year. So because the Jupe token's already traded for a full year, the people who get it in that second year, that is actually going to be an income tax event.
Yes.
So if they get $1,000 of Jupe tokens in that second airdrop, then it's $1,000 of income tax. And the thing that's really difficult about both the US and the Australian taxation system is if you're custodying these crypto assets in your personal name, if it is an income tax event and then you go sell it at a loss, unfortunately, that loss doesn't negate the income tax obligation. So if you have $1,000 airdropped to you and it's not the token genesis event, you have $1,000 income tax. Let's say that drops to the core of the earth and it's worth $10 by the time you sell it. You have a $9,990 loss, but you also have, $990 loss and $1,000 income taxable event. That $990 loss, unfortunately, isn't going to reduce the income tax that you owe. So you've recuperated $10 and you have to essentially pay your tax rate. Let's say it's just for ease 25%. You've got a $250 income tax bill, and then you've recovered $10 worth of value out of that airdrop to try to pay that off. And if you scale that up to some of the huge airdrops that people have received, ones that are 5-6 figure airdrops, if that happens, that can be really kind of devastating. So, it's something to be aware of and to understand. And it's another reason to have good, competent like tax planning, this isn't something that we offer, but it's something that like any good CPA or chartered accountant here in Australia should be able to offer you. And they should help you figure out, based off your overall financial picture, what's potentially the best entity structure to like have custody over all of your assets. Would it make more sense to have your crypto custodied in a company, for example? Because if it's in a company, then when you receive the airdrop, it's just revenue. And if you sell it at a loss, then that's a loss that can then offset the revenue that came in. So, you're not putting yourself into one of those sticky type of situations. 100%. So, it's important to have a chartered accountant because then they look at the overall picture. They might see like, okay, well, you've got real estate here, you've got a business here, you've got your crypto here. How do we need to house these things? Like, where do the assets, like what umbrella do they need to fall under to make sure that, your tax is at the lowest rate legally possible? And that's a highly personalized thing that I think it's worth getting at least 1 year of tax planning from a good chartered accountant who understands the different elements of your situation at least once. If you have real estate, business, and crypto, if you just are a salary earner and you're, doing some trading in crypto, it may not pay for itself because, there is an expense to getting that tax planning. There's expenses to maintaining entities like trusts and companies and things like that. Yeah. And it also adds in a layer of complexity where, do you really want to have to file BAS, for your every quarter, as well as doing your PayG for you as an individual? 100%. And, it's like, it adds layers of complexity. So those are other things that are worth considering. But for people who are swinging really big or having big windfalls, it can definitely be worth its weight in gold to get that type of advice.
I mean, like that's so true, Matt, because I heard quite a few people, they get like the massive airdrops and now they've gone bankrupt because of the tax liabilities. And I think that's the bit of the downside of the, the unforeseen crypto, the airdrops side of things. So with regards to how does it work in the US, for example? How does that work in the US? Because you say like, I much rather like how it works in Australia. And I'm pretty sure that you're not really happy with how it works in the US. So
Yeah. So in the US, it's just income. Airdrops are just income. Staking rewards, for example, are just treated as income. And there is a crew right now that's kind of pushing back in court against staking rewards being income. They're trying to get it treated almost like the token Genesis airdrop is treated in Australia. So we'll see what the result of that is. But yeah, in the US, airdrop income, and then same thing, if you sell it at a loss, only $3,000 of losses per year in the US, if you're single or married filing jointly, can go against any income earned. So that's one difference between the US and Australia. In the US, if you have like $100,000 loss 1 year, and then you never make money for the rest of your life because you suck at investing, at least over the next 30 years, or 33 years, $3,000 gets taken off or deducted from your income for that loss. So they kind of amortize it over time.
Got it.
Yeah.
All right. Cool. That's okay. That works there. So with the types of crypto that we have, all these different, like, I don't know, the types of crypto, whether it's if I take about Bitcoin versus other crypto, is there any special rule when it comes to Bitcoin, or is it just treated same as the other cryptos, pretty much?
Yeah, because in general, most of the guidance is they're trying to create the guidance that is an umbrella that encompasses kind of like all digital assets or currencies. And so it would be, so if they regulated or taxed different tokens in different ways, man, that would add so much complexity. It's just really unfair to the taxpayer to have to stay on top of that. I think honestly, one of the things I love about Australia compared to the US is actually the tax system is a lot less complex here. There's a lot less moving parts, and it's a lot easier to file your tax return and have clarity kind of upfront on how much you might owe. Whereas in the US, it's like, man, there's so many, you need to know this form and how to fill that form out. And there's all these like if then kind of statements that make it unnecessarily complex. Like when I moved here, I was like, oh, this is great. This
Okay.
is way easier than back home.
Is it like, so would you say it's better because it's easier, or do you think like because of the US, because of the complexities that you can really work your tax losses or gains much better if you know the system? What is that looks like? Because one of the things that in Australia we're talking about, I know quite a few people weren't happy, even including myself, weren't happy that people put all tokens just under one umbrella when we know there are different types of tokens. I know that it's complex, but having the separation of the utility tokens versus securities and things like that,
Mm.
so in that instance, like in the US, how does it work in US? Is it is there a separation like that, or is it still under just digital assets or crypto?
Yeah, they just kind of put out guidance
Yeah.
on virtual currencies, and that guidance encompasses Bitcoin and the fungible tokens,
Yeah.
and also they'll give a little bit of guidance on non-fungible. I think in both Australia and the US, the amount of guidance on NFTs, non-fungible tokens,
Yes.
is a lot less than what they've kind of put out on fungible tokens.
Hmm.
Yeah.
Yeah. Okay. Cool. Alrighty. So one of the questions here is like best practices for managing crypto taxes. I mean, it's a huge, it's a massive subject. So if you pick up like the top three, let's talk about top three. What are the things that you should be aware of? I mean, like you mentioned about a company structure or business structure, but it might not work for people who are not who owns of assets, who own product assets. That's one. Like if you have like any other two other top points, what would they be?
Yeah, I think that the main thing is, and this applies to everybody, is you want to make sure that you've picked the right crypto tax software for your specific situation. The reason that this is important is because like you could manually keep track of all your data with a spreadsheet. But my question then becomes why? That is such a headache to manually enter every trade, grab the necessary data off the blockchain. I think I made a post recently about how this crypto tax software, if a client had trusted it, they would have ended up paying close to $2 million in tax. They ended up, and they ended up owing far less than that once I actually manually reconciled all of the transactions in their account. And some people took that to mean like, well, what's the point of crypto tax software if it's going to get it so wrong? And I think you might understand this, but like as somebody who's like involved with business, we use Xero or QuickBooks or whatever to do our books. We don't expect that if we hook our bank accounts and PayPal and payment processors into Xero, that it's going to like spit out a perfectly formatted financial statement for us. It's like we know that we actually have to have us or our bookkeeper go in and actually categorize the different transactions in order to get accurate financial records. And that's how to think about the crypto tax softwares. They actually pull all the data in off the blockchain without you having to really do anything. Like initially you might set up the API, or sure, you might have to download a CSV file and then upload it, but it's going to aggregate all the data and it's going to put it into a user interface. It makes it a lot easier for you to go and investigate. What is this transaction? What was I doing? Can I go look on the blockchain? Okay. And it just makes it a lot easier for you to actually process the transactions. And it's a lot less manual labor on your part. And then it also, once you like, if you do it yourself and you manually process the transactions, it's going to spit out a tax report that's formatted and you can hand it to even the most dinosaur chartered accountant who has no idea what crypto is. They'll know how to put it into your tax return, or you can self-file using it. And then, if you're using a spreadsheet, that's just not the case. And then you've got to send this spreadsheet to an accountant who's going to look at it and go, what the heck is this? And, they're going to end up billing you a ton just to try to figure out how to format it into your. So, there's some huge advantages to setting up the right tax software. You just have to have the right expectations about what the tool can do. And it's not going to end up getting you an accurate number straight out of the box. Either you need to do it yourself, you need to use a service like we offer, or find another, similar service to what we offer to actually get a relatively accurate crypto tax report. So, that's the thing that I think just broadly applies to everybody is get the right crypto tax software set up as soon as you possibly can. And, that's going to make your life a lot easier. It's going to save you a ton of time.
Oh yes, look, I started doing my tax since 21,
Yeah.
and because I started trading 2016, 2017, and obviously had bad, burned the whole thing. It was crazy, and then I just had a little bit of hiatus, and then we got back in 2021, and since then I've been sort of getting into this crap. And but what I noticed was that you know every software does it differently, even though you pick the same thing. It's I think that's given each software, like as you said, just because you use zero and myob doesn't have the same report. It's like what you enter, how you categorize it, and how it works in the back end. So
Yeah.
so is it? Am I right saying that, like, okay, if you pick a certain software, it'll do, like, say 70% of it, but having someone like yourself getting involved just to put that finishing touches and that sort of icing on the cake, or tying the ribbon in the prize, right? That gets that the final figure a lot more optimized and work better in their favor.
Yeah, definitely. I think the problem right now is that there's so much innovation in terms of even token standards.
Yes.
And there's also all of these new blockchains and layer twos being released. It's really difficult for the crypto tax softwares to keep up. It's like they'll usually be pushing really hard just to make sure during tax season that any bugs are patched, and that the code that they've already shipped is kind of bulletproof. They're not shipping tons of new features and new code during tax season because they don't want things to break, which makes sense. And then they use the kind of off season, if you will, to really start cooking and building in new features and supporting new blockchains. But, especially this year, so many people started using a bunch of new layer twos or kind of new layer ones. Solana became really popular, whereas I think a lot of people thought it was going to die. And because I think so many people thought Solana was just a dead chain, a lot of the tax softwares, they didn't spend the time in the last off season developing adequate support for Solana. And so I don't think we're ready for that huge kind of wealth effect that caused there to be huge transaction volumes running through Solana wallets in the end of 2023. And that's been a major issue that I found. So when picking the best tax software, I find that it's like, if I'm giving a client a recommendation, I will ask them what blockchains they've used from most to least. One of the most important determining factors for picking the right software is the blockchain they have the most volume of transactions on supported natively by the crypto tax software. And if not, it's going to be really difficult. Like, for example, for a long time, Coinly, they had no Solana support. So everything was being pulled in, or not even everything was being pulled in. Like, all the data off the blockchain didn't end up in Coinly. And, the other issue is just that they didn't have any automations. Like, their algorithm wasn't automatically applying any transactions. So if somebody was Solana native, they only used Solana, Coinly wouldn't have been the right choice for them. They would have been better off using one of the softwares that did actually, create better Solana integrations and automations. Whereas Coinly, they seem to have put a really big focus on getting the most exchange integrations, so centralized exchanges, and they've done really well with all the EVMs and layer twos. So, somebody who is mostly on central exchanges and they're just using like Ethereum mainnet and Optimism and some of the layer twos, Coinly would be like the perfect software for them. So, picking the one that fits your trading history is actually potentially going to save you a ton of time and headache getting the work done. And then kind of the second thing to look for is it a user interface that you like using? Because if you're going to do it yourself, you're going to be spending hours in that software. And if you don't like the user interface, you're going to be pulling your hair out. You're going to absolutely hate it because you're going to be spending hours over the course of potentially weeks with that software. So it is important to pick one where user interface is good, and maybe even, test out their chat support. See if their chat support is responsive enough and helpful enough for you, because you will probably have questions if you're doing it yourself.
No, 100%. No. That's great advice, Matt. Also seeing the cost of usage, because the first year I tried a few platforms,
Yep.
just to see what that looks like. I'm not a like a trader, so that I don't have thousands of trades. So for me, for $60-70, I can get an account that covers my transactions, and with that one, you can compare and then work out. Okay, look, which one works and which one that you like to use and less complicated and have a lot more like good help files, especially because when I went to my accountant the first year, I just gave a spreadsheet, and you can see his face like, I don't know where to start. I don't know what to do with this one.
Yeah.
Um, and I think with the tax software, this really helps now. Just like what Zero did to the accountants now, they expect this from the for the tax software, which is fantastic. I think when you becomes a trader, I don't think you can keep up with all the trades that you do. Right? It must be a nightmare.
Yeah. Yeah. It'd be maybe not impossible, but it would be a nightmare. Yeah.
It would be a nightmare. Yeah. Cool. Alrighty. So, my next question is like, so debunking common tax myths. So what are the tax myths that you think like, oh, you know what, oh, that no, that's not right, you know what I mean?
Yeah.
Because some people are like, oh, I'm just like, on decentralized exchange, and I'm like out there, so I don't have to pay tax or whatever that is. So what are those like top three for you?
Yeah. Yeah, I'd say, number one is thinking that, just because it's crypto, that it's anonymous and that the ATO wouldn't be able to see what you've been up to. It's like you would know as well, because you guys do crypto forensics. It's incredibly easy. It's like you could almost give me one data point and I could almost reverse engineer which wallets belong to which person. It's very easy. And the ATO has even put out a statement that says that they've got advanced data matching capabilities to be able to see okay, is what you're reporting equal to kind of what we've tied to you?
Yeah.
So I think the first one is that, it's a big myth that crypto is anonymous. It's absolutely not, especially if you're onboarding or offboarding any fiat currencies through a centralized exchange where you have verified your identity. There's a really clear paper trail, and it's very easy to figure out which wallets belong to and which don't. Now, whether or not the ATO is going to scrutinize you, who knows? Maybe you get away with it if you decide that you're not going to. But if you don't, it's pretty harsh penalties and probably not worth it in most cases. So that's the first kind of myth that I see. The second one is there's no point in filing my tax for crypto if I lost money. All I did was lose money. There's no point in filing. But the thing is, you can actually carry your losses forward indefinitely year over year. So if you lost money, let's say in 21, 22, when everything was melting down, and you're like, oh, well, I lost money, there's no point. Well, you essentially just gave up this get out of taxes free card. It's like if you lost $10,000 in 21, 22, and then 22, 23, you stuck it out, you learned from your mistakes, and you had a positive P&L.
Yeah.
Well, you could have had $10,000 that would offset that. Yeah. Why wouldn't you? Yeah. Because it's something that you can use. It's of benefit to you to actually claim your losses. So I've actually been helping people recently go back over the last 2 years and get accurate reports, because they're like, oh, I lost money. I didn't realize I could carry those forward. We do the reporting. We amend their returns so they can get those losses, because now in the kind of 23, 24 tax year, they know that they're going to be positive P&L. And so they know that, okay, it's of benefit to me to kind of get square here, get up to date. Yeah. Now, you don't have to be looking over your shoulder, and you have this benefit of, okay, well, I have this loss that I'm carrying forward, and I can keep some of my gains, free, so to speak.
Yeah. No, that's a really good point, Matt. Thank you so much, Matt, because we hear time to time from people saying, okay, look, I lost so much money there, and now they're starting, and now they're worried that they're going to get taxed. But being able to write off some of that because you lost money in the past, I think that gives people a lot of hope, and I think they will come out of woodwork and start using how they can offset or balance out so that they can keep the money that they are, we are already in the bull market, no doubt about it, right?
Yeah.
And knowing that, especially having those losses to write out again, that's like, why not? I think that would be awesome. So
Yeah, exactly.
yeah,
Yeah,
cool.
and I
All
guess
right, that's
a
awesome.
cheeky
Yeah,
third one would just be around like tax losses and
yeah,
like buying a bunch of crap at the end of the financial year. I think
yeah.
that's
What's
one
that
of
all
the
about?
I think that's one of the biggest myths. It's like unless you were already going to buy something, there's no benefit. Like, if you buy $100,000 ute at the end of the financial year that you didn't need,
Hmm.
well, you have the tax write off, but if your tax rate, if you buy it in your company and your tax rate's 25%, well, sure, okay, like, you can expense it and you've essentially saved 25,000 in tax because it offsets 100,000 in income. But if you didn't need that ute, then you could have just had that money go to your pocket instead
Yeah,
of going into something that's a depreciating asset that you don't need. So that's a huge one. And then as it applies to crypto, I think a lot of people are like, oh, it's just, that big loss that I took, I'm just tax loss harvesting. It's like, well, if you didn't lose money, like that's crypto
yeah,
that's still in your pocket. Like the tax loss harvesting is the kind of consolation prize for losing.
yeah,
It's not in itself a prize. And it's funny
yeah,
because I'll have a lot of people who they'll come to me and they're like, oh, I hope I lost money so I don't have to pay tax. It's like, no, like paying tax is like something that you do when you won,
Hmm.
like
Right.
go win,
Yes, yes, yes.
yeah.
I think that's
It's
why
like the flies biting off you,
yeah,
because you're the winner.
no,
But
that
you
is so
still
true
won.
because yeah,
Yeah.
I mean, like if you're winning, why not? You don't want to not pay tax. You just want to minimize paying tax. That's what work
Yeah.
it out. I mean, that's the thing.
Exactly.
It's not illegal to minimize your
Yeah.
tax liabilities. So no, that makes sense because I know that when around that U.S. Financial tax year, financial year, you hear a lot about I
Yeah.
had to offset my thing. I'm going to sell here, buy this, sell some NFTs and buy this one and buy that one. I think I noticed that last year that got trickled down to Australia, and everyone's
Yeah.
asking this question. I'm like, oh, I don't think it works like that here.
No, it doesn't. Yeah, that's another thing that's kind of a myth from my Aussie clients is they'll hit me up and they'll be like, oh, I want to do some tax loss harvesting. And I'm well, like
What's
you
that?
can't do that here. Yeah, that's considered a wash sale. Like you'll get,
Yes, yeah,
the ATO is not going to accept that.
no,
So yeah, so that's another myth. Is like the
Mm.
U.S. tax loss harvesting that you've probably heard a U.S. based influencer talking
yes,
about does not work here.
yeah. No,
Yeah,
I think that's a really good point. So,
yeah,
alrighty. So I got like three questions that I was going through your Twitter feed and
yeah.
I wrote down a couple of questions because one of them was like airdrops and tax, and I think you really
Mm,
we danced around that one. I think you really explained how that works, and that's really good. And thank you for that. And the next one I got a question is that so you mentioned about ordinals, and to be
mm.
honest, I got a couple of ordinals and it's sitting there. I don't think even I don't even know how to get access to it. I think it's somewhere in one of the wallets, right? So and yeah, how does that work when it comes to tax? So
Yeah, it's difficult because the way that it looks on the blockchain, just because of how Bitcoin is, Bitcoin doesn't support smart contracts or anything
yeah,
like that, So when the data is pulled off the blockchain, it just looks like Bitcoin going out and Bitcoin
mm,
going in. So they're unlike if you were to set up your tax software and you were to buy like an ERC-721 NFT.
yeah,
Like, okay, the tax software is going to see, okay, Ethereum went out to the smart contract and this NFT came to your
mm,
from the smart contract. This is a swap,
yeah.
ETH in, NFT. Yeah,
Simple, yes, right,
yeah.
yes,
So when it comes to ordinals, the problem is that that's not how it looks. It looks like, maybe you sent, let's say 0.01 Bitcoin to your Xverse or your Unisat
mm,
wallet to fund it. And then you bought some ordinals and then it just kind of looks like whatever 0.01
yeah,
Bitcoin goes out. But it doesn't look like you received anything in consideration. So then it looks like 0.01 Bitcoin. Okay, that's a taxable disposal. You pay your capital gains tax on that. But then it doesn't assign the cost basis to the ordinal that you've received, or the inscription that's now in your wallet. So then, what we have to do is we have to look at order scan, and we'll see like, okay, well, you've bought this NFT. So then we have to kind of create a placeholder inside of the tax software that represents that ordinal. And so now we can say, okay, that Bitcoin that went out, it was used to purchase this placeholder inside the tax software. And then if we see on order scan that you sold that, and now there's a deposit of, let's say, you crushed it and it's 0.1 Bitcoin now, then, okay, the 0.01 Bitcoin is the cost basis. The 0.1 is what you received. So you essentially like profited 0.09 Bitcoin. And that's how we have to kind of work that out. It's a really manual process, unfortunately. There's not, to my knowledge, and I'd be happy if there is any tax software that does it, but to my knowledge, there isn't any that actually natively support ordinals or inscriptions or even like buying rare Satoshis. So I think that's something that, because it's blown up so much this cycle, if it has staying power, I think we will see better support for ordinals. But at the moment, it's like a highly manual labor process that we're currently doing. And I think it might be potentially beyond like somebody who's brand new to doing their crypto taxes, kind of beyond what they want to spend their time doing.
100%. And I wonder what type of inscriptions that BlackRock and Michael Saylor got with all the buying of like few $1 billion worth of Bitcoin. No,
I know,
that'd be cool.
Satoshi's in there, I'm sure. I think I heard that one. I think it was like a fund or was it one of the ETFs? I heard of a service that was essentially going in and looking through all the sats that some of these companies trust. Yeah, and then they were like, oh, this is a rare one. And they were essentially brokering it. So it was like they'd go through, find the rare sats or the inscriptions, and then they would just go sell those on the open market and send it. I think it was actually miners, potentially even. Yeah, I think miners had some people who were coming in and taking a look and seeing if they mined any rare sats, and then kind of brokering that sale, and they take their cut on the sale of those rare sats. Apparently the first block post halving has like this crazy bidding war that's going to be going on. It's kind of cool to look into if anybody wants to go down a rabbit hole.
I mean, that's the thing is, I think that's why, as you said, like, this space is moving that fast. We can't keep up with what's really, we don't even know how to keep up with the technology, let alone doing, how does it now, how tax, work for these new types of tokens and new ways of economies. So thank you for that. And the next question is, so we had in our last podcast, we had Ruthie, and we talked about Web3 marketing and how it works. And one of the things actually came up was that if you see ads on X, you just turn back and run, like do 180 on it. And then you post a comment, and I would like to take, what is your take on ads on X? So
I was commenting on that because I thought that with the tax business that maybe it would be a little bit more trustworthy than if somebody was running ads to their Web3 project or NFT or whatever, any other kind of Web3 or crypto thing. So I actually put a bunch of money into Facebook and YouTube and Google pay-per-click, all the old Web2 kind of advertising. And I just wanted to see, like, does it work? And what I learned is it doesn't. But I was really hesitant to do any ads on X because there's just this like terrible plague of wallet drainers that are advertising on X. And I thought there's no way that people are going to actually respond to the ads. It's going to be a waste of money. So whenever I have a strong opinion like that, it's usually loosely held and I want to challenge it. So I decided I'm just gonna see, can I get ads on X to actually work for me in some way? And I really just reverse engineered it and thought, okay, people aren't going to want to click on a link because, it might be a drainer. They're not going to trust that. And I was thinking about, well, in Web3, what's the most important thing? And it's trust and community. when it comes to Web3 marketing. So I realized, all right, I've grown my Twitter. I have a lot of my clients will constantly, like shout me out or kind of, like sing our praises. And I thought, if I can get people to see our Twitter feed and kind of go down our rabbit hole and get to know us, then that's going to potentially lead to them going, okay, I trust these guys, so I'm going to at least fill out the web form and try to get a quote. So my strategy with the X ads was actually, I'm just going to write a few kind of cheeky ads that say, follow us, and this is the value proposition for why you should follow us. And we were getting followers for really cheap. And, it's a really low budget that I'm running, but it's just a way to, continuously target people in the Web3 community and get in front of them. So especially now with it being tax season, people are like, oh, crypto tax, I could afford to learn a thing or two. And so they'll follow us and, they go through all of our content. And then by the time that they trust us, they'll fill out the web form and make an inquiry. So it's actually worked pretty well. I don't have really great attribution for like how many sales have been driven by it, but it's led to more followers, and we definitely, since we started doing it, have had more website clicks from our Twitter profile when we look at the analytics. So, just that lift alone has made it a worthwhile investment. We're not doing anything crazy. It's like $5-10 a day, depending on how many campaigns we have active. But yeah, it's definitely something where I think Web3 marketing wise, anybody else in the space, that's potentially an avenue worth exploring, because it's worked for us so far.
Yeah, I think you just said it right, because as in this space, if you see a project being promoted and you just I don't feel comfortable, even like
red flag.
Yeah, but even though they might come from the Web 2 world, or not say Web 2 world, sort of outside of crypto world. They come into the space and they start doing, and then in good faith they start doing ads and putting links and all that, but they don't understand, I think, that culture, the nuances in Web3, without knowing that they're like, oh, why it's not working. I guess it must be, you get a lot more people seeing it, but no one's really engaging with it because of the lessons. I think we always say you are your bank, and not your keys and all that. So I think everyone is a lot more getting cautious and a lot more educated, which is a good thing as well. And that's fantastic. Cool.
Yeah.
All right. So we are coming close to the end, and I got a couple of more questions. So I put the word out saying, look, we're having Matt from Crypto Tax Made Easy, and anyone who got any questions. So I got these questions here.
Pages.
Right? And these are all from very good friends.
Yeah.
All right. Okay. So here you go. The first one. Okay. So a very good friend asked me this question. Right. That if I transfer, it's them saying it. If I transfer my Bitcoin from one of my wallets to another wallet of my wallet, is it a taxable income event?
No, because you own both of those wallets, so that's a non-taxable event.
All right, cool. That's easy. All right. And another friend asked this question. And he's mining crypto, right?
Yeah.
So what kind of expenses can he deduct when come to?
Yeah, so that would be a question for his chartered accountant.
All right.
Yeah.
Cool.
Yeah.
All right. That's good.
Yeah.
All right. I think I'm gonna ask this is the last question, because I think I know that you got a bit on. So this guy here, he's planning to donate some of his crypto to charity. So then he was like, how does this impact his tax situation when he donates crypto to a charity?
That's a good question. Oh man, I'm deep in the U.S. tax right now, and I can't remember if it was U.S., Australia, or both. But because crypto is a capital asset, you oftentimes have to have a third-party assessor who actually verifies what the value of the asset is when you donate it. Because if you think about it, it's like if you donate a car to charity, you need to have somebody who, because a car would be a capital asset, you have to have somebody who says, yeah, this vehicle would be worth $10,000, and then you have the $10,000 donation that you can then write off.
Yeah.
Because even though crypto has like liquid markets and you can see what the price is, I'm pretty sure you actually, don't quote me on this, but it's worth looking into. I think that you might have to have a third party assess what the value of it is. Literally, all they're going to do is look on CoinMarketCap and figure it out. Yeah. But you're essentially paying for them signing off and saying, yes, the value of this crypto at the time of disposal was this much. Yeah. So that's one kind of difference when it comes to donations. It would also be worth Chris from Charity Token. I don't know if he'd be someone who might have looked into this. Yeah.
No, it'll be interesting because he was basically on, tokenomics anyway, I think, in that one. So cool. Awesome. So just to finish off, Matt, so what's your prediction for this year? So, I mean, like, look, there are so many signs going on, and these are the trick question. I was more like asking the question from the people who are we had the ETF, Bitcoin ETF in the US, and it's almost feels like now Bitcoin or crypto being a little bit more accepted by the corporates, by the Wall Streets, places like that. So what is your take on the market for this year?
Yeah, I think it's the most entertaining outcome is the most likely outcome. I think that's going to be one of my predictions. Yeah. My other prediction is going to be that Jim Cramer is going to say it's a sell, and it's just going to keep ripping after Jim Cramer says sell. But as soon as Jim Cramer flips bullish and Coinbase app is the #1 app in the Apple App Store, I think that we can pretty safely say that the top's in.
Oh my, good answer. So just to finish off, Matt, where do you want the listeners and viewers to go if they want to seek advice from Crypto Tax Made Easy?
Yeah, so you can go to our website, cryptotaxmadeeasy.com, and you can request a quote from us where we'll essentially take a look. If you don't have a software set up, we'll get you set up on the best crypto tax software for you. And then once that's done, or if you already have one set up, we'll get access as your accountant. We'll do an initial review for free where we just take a look. How complex is it? How many transactions are you putting through? And how many wallets do you have? And based off that, we can kind of give you a quote on, we'll give you a flat rate quote on how much is it going to cost for us to do this work. That way, up front, if that's acceptable to you, we can work together. If not, I'll give you some resources so you can get it done yourself. And yeah, if you want to follow us on Twitter or X, it's at CryptoTaxSucks. So.
It definitely does. It definitely does. Thank you so much, Matt. I know that you're super active on X. Are there any other platforms that you are active as much as X, or are you just knee deep?
Just knee deep. I really don't have the time to be anywhere else.
Yeah, not TikTok, not yet.
No, not TikTok. I don't think I'll be jumping on TikTok.
Mate, 2024, you might have to.
Oh man, I'll hire somebody else to do that. Yeah, it won't be me. If there's a Crypto Tax Made Easy TikTok, I can assure you it will not be my face on there.
No, man, thank you so much. I really appreciate your time and giving sharing your wisdom with the community. And look, you can't have enough tax advice or even that the information is not readily available, because sometimes when you read it, it doesn't make sense. And having you, and I've been following you for a while now on X, and seeing your tweets, and they don't call tweets anymore, right? They are posts now, right? Seeing them and following them, and I know you bring so much value to the ecosystem, and
Thank you.
great content, and I love seeing your posts and replies. So again, thank you so much. And anyone looking to get advice on tax, please hit Matt up. And he's a really nice guy, and I'm pretty sure that he's like really super smart when it comes to tax as well. Best to be safe than sorry, I would say, Matt.
Definitely. Awesome. And thanks for having me, Cozy. Appreciate it, man.
No worries. Thank you so much, Matt. Catch you later.
See ya.
See you later. Peace out.
Hey, welcome to Web3 Weekly with your host, Blockstar Technology.
Let's go.